Welcome everyone back to another episode of Geonet Properties and Finance Group. Please like and subscribe at the button below. Lots of valuable information coming to you, and today we're talking all things finance with one of our very special guests, Chrystal Evans from Attain Loans. I've actually known Chrystal, it's a funny story, for 25 years. I feel really old when I say that. 25 years, and we've been working together for about 6 years. Chrystal, I just want to explain Chrystal's business with her offices in Melbourne. She works with over 600 different brokers within the network. There's over 50 different lenders within the panel, a network of accountants and financial planners, all geared towards helping property buyers and property investors. Yeah. So Chrystal, welcome to the show.
Hello. Just a little while we've known each other.
Just a little while, right? Wow. And Chrystal, thanks for coming on. So today we're going to be talking about refinancing. Yeah, it's like the hottest topic in Australia at the moment, and people are getting nervous. So I guess this is a really good opportunity just to help people understand what they can do a little bit better with their financial structure, with their mortgages at the moment, and start to think about getting some experts in, right?
Yeah.
Yeah.
So we're obviously getting a lot of people contacting us about the same content. There's lots of advertising going out from big banks, and they're spending a lot of money on it. And what that does is it whips up a bit of a frenzy for people, whether they should or they shouldn't refinance. And rates are going up, so people are getting a little uncomfortable. We've had it pretty good for the last couple of years.
And it was a tough year. Next year's going to be a little bit harder. So like now is the time to start getting a rate check. And let's just think about this year. The official cash rate went from 0.1 and today is at 2.85. Okay, so that's a concern for every...
It's been a wild ride.
It's a wild ride. It's busy in the Attain offices at the moment, right? So the cash rate's up, and then we were looking at some of the research. AMP did a really great document, and they put it out last month. You'll actually find it on our blogs as well. Can read into that. But 43% of Australian homeowners are considering refinancing. That's like with real numbers. 2.5 million homes are looking at refinance within the next 12 to 18 months. So if you're going to be doing something, start thinking about it now, right? Because the banks are getting busy.
Yeah, they are. And coming up to Christmas, it is quite busy, but they do also ramp up their advertising at this time of the year too. So they try and get people through the door, and that kind of creates that panic that we're seeing at the moment with applications. I would say the best thing to do is start somewhere. Start a conversation with a broker.
You don't necessarily have to make a decision right now, but the point is let's start speaking to people. Let's start speaking to experts, and I think that's the really important part with Attain Loans, is they've been around for a long time. You have your offices in Melbourne, but you can help people from all over the country. Yeah.
Yeah, we service the whole of Australia.
Whole of Australia, where you've got a number of brokers on call working full time for Attain. We have the support staff. You have the accounting staff, and then you have access to, and this is the thing, because you've been in the financial business for such a long time, you have access to a number of relationships from self-managed super fund advisors, financial advisors, and accountants.
Yeah, and finding good ones is really important. So one of the things that's really important is that we won't refer our clients to someone unless we know they're going to treat them the same way we do. There's lots of accountants out there. All of them have their own niche. There's lots of financial advisors out there. They also have their own niche. So you need to find a group of people that can work well with each other and give you the right advice at the right time. I think that's really important.
Yeah, and Craig, I know that you're dealing with a lot of clients, a lot of phone calls on a daily basis as well. So a lot of people are concerned out there too, right?
Yeah, absolutely. And I mean, that's the good point of this podcast, is that a lot of people, they don't know where to start.
Right.
You know, they see an ad from some bank or some lender, and they go, oh, I don't know, they're just trying to get me to change or, buy their product. And that's the big thing here, what we're talking about, is that with Attain, with Chrystal, that's where you start. You get advice. You get the whole thing. What financial advice? What you should be doing at this time. So again, this is a very key thing of knowing where to start.
Yeah. And so, Chrystal, we're talking refinance. what's the cost to refinance? Firstly, the conversation's free, but what's the cost? To refinance?
Look, the first point is you're getting a lot of calls, but it is really a 10 to 15 minute phone call to at least have a quick rate check. And I think people need to remember that's the place to start. Most places you can do that for free. Pick up the phone, have a conversation, and an experienced broker will ask the right questions. What kind of loan do you have? Is it fixed? Is it variable? How long have you had it? Who is it with? What are you paying right now? All of these, are you self-employed? Are you, they'll ask the right questions, and that conversation is actually really quick to have. Checking the rates also is very quick to do, and that's important to understand because there's a lot of advertisements out there that are not right. The banks make the most of being slow to update their advertisements in terms of rates and fees. So somebody can do that while you're on the phone. It's a 10 to 15 minute exercise. So whether it's right to do it, as you said, what does it cost? Should I do it? Each state, there's at least a couple of $100 each state to just do the registration and discharge to refinance. Usually there's some application fees, and they can range from zero if there's a campaign running with a bank to, $1,500 with a normal, the normal tier 1 or tier 2.
Because there's so many products out there.
Yeah, there's just so many. There's so many products. Like literally from the 50 plus lenders that I deal with, there's over 600 if not more. That was last count. There's probably more than that. So, each kind of product has its own application fees, but again, considering whether I'm going to get a slightly better rate but I'm going to spend money moving, that's a conversation to have. But most of the time, if there's a rate discount to be had, there's usually some benefit at least looking at it.
So Chrystal, cashback offers, like we're seeing those from lots of different banks. I'm seeing the ads in Channel 7, Channel 9. We have some offers like that with the cashback that we're working with as well.
Yeah, so they're very popular at the minute. There's 10 of the majors off the top, 10 first tier, second tier lenders that are offering cashback to switch at the moment.
Right.
And I always get asked the question, like, is it good? Does it work out better in the end? And yes, there's definitely some pros and cons to them. You might pay a slight little bit more with some of the banks for the cashback, or the cashback might be slightly lower for a better rate, depending on the bank. Mm-hmm. There's definitely banks out there with no cashback that have got a lower rate. And if you're looking to pay your loan off over 30 years, well, then, yeah, you definitely consider those. But if, like most people, you don't want to be paying it off over 30 years and you're going to review it,
right.
Looking at a shorter term saving, maybe 3 to 5 years, and then reviewing it again as things change, because you've got to remember people's lives change all the time. They have kids, they change jobs, they sell, they buy. So if you're looking at that shorter term, then cashbacks often work out, ahead in terms of the benefit gained, in terms of the rate change and the cashback. Once you add those things up and deduct the cost to switch, you usually do end up in front after a few years.
And it's safe to assume, of course, that all of this, the software, the proposal, the costing structure to the client is everything that you provide anyway, with the options and making an easy, digestible format for the client to make a decision. Is it right for me now? Yes, generally. It is right now because things are moving so quickly. But when we send them a proposal, they've got everything in front of them.
Yeah, we actually give them the full 30 years comparison. So what are you going to save over 30 years? But we'll always have that conversation and calculation with them to say, hey, these are what it looks like short term. So if you're taking cash back of $5,000 and the rate's 0.01% different, well, then obviously that $5,000 is probably going to outweigh it. So we do look at that short term, and we do talk to them about their goals too, because if you're going, well, this house that I'm in right now, I'm probably going to sell it and I'm going to move. I've got goals to, upgrade my home or downgrade my home in the next 5 years. Well, then considering a 30-year comparison is not always appropriate. So we do definitely have those conversations, and they definitely get that in their proposals. It's a 2-page document. It's not anything overly complicated, but it does really clearly say, this is the savings.
So, Chrystal, you being the expert, what is, someone comes in, like a person like me, well, I'm too old, I can't get a loan anymore, but someone comes in, okay.
Never say never.
Someone comes in and they say, okay, yeah, we want our mortgage, we got this and that. What, again, you just talked briefly about a 30-year mortgage, and that's what people seem to think. Okay, yep, we're going to be paying this for 30 years. What is the right structure going forward for? I know it'll change on circumstances, but in your opinion, what is the right structure? What should people be looking at when they are confronted with this 30-year loan? What should they be looking at?
It's funny because when you have a conversation, like I always say to people, it's not just rates and fees. It's actually a relationship, because I deal with heaps of first home buyers. I deal with heaps of investor clients. We've got a really good mix, but the conversation I have with my first home buyers is very different to someone that,
right.
Might be 10 years into their mortgage and has some savings sitting in an offset or sitting in an account that's not offsetting a loan. So structure is super important. Sometimes more important than the rate and fees, right? So flexibility in having the right structure and accounts linked to it can make a huge difference to the end interest that you pay. So for clients that have savings and that like to, we see a lot of clients that have read Barefoot Investor too. So we've got, they've got lots of funnels of savings. And what that means is there's some banks that only allow you to have one offset account. So if you want to run those funnels, there's going to be accounts that don't offset, right? But other banks, Suncorp, CBA, Bankwest, they have multiple offset accounts, which means you can still run your funnels and every single one of those accounts is going to offset your mortgage. So when I'm talking to a client, it's about structure as well. It's okay, let's look at your financial situation. We've got clients who say, nope, can't live on a credit card, I'll spend too much. We've got other clients that are really committed to it and can clear it every single month. And that's a really good strategy for debt reduction if you can keep that money in sitting in your offset as long as possible. So we've got debt consolidation strategies we can give them. We can help them with savings goals tools that we have access to for free through partners that we've known for a long time.
And the credit card. I threw my credit card away 10 years ago.
Chad is not the guy you're putting on a credit card.
I think mine got taken away, but anyway, I don't have one either, so it's good.
Yeah, no, I've got lots of clients who are like, nope, I'm in control, I'm good, and they've been in control for a long time and they know what they're doing. So you give them some tips and get the structure right, and they can pay it off a lot sooner. Sometimes you see them pay it off in 10 years, right? Yeah. So when we're looking at that saving goal, it's also about paying off that debt and having it structured so that they don't have it for 30 years. Because if they're sitting there going, yep, I'm committed to this and I'm stuck in it for 30 years, then, it's not the right structure. And sometimes it's a conversation that might start and it evolves over time with clients. You know what I mean? It might be when they're first home buyers, we've got nothing left. We've bought our first home, we've got nothing left. Yeah. Don't give us an offset because we're going to have nothing in it. Just get us the cheapest rate. And sometimes that's the conversation and that's the right thing at the time. But then, 3 to 5 years down the track, their financial situations change quite a lot. They're ready for an offset account. They're ready for restructuring. They're ready to buy an investment and perhaps try and grow their wealth a little bit with the intention to pay off their home at some point with that wealth. So, it's an evolving conversation, but it's definitely one we start and educate people on at the very start, because they need to know and be in control as to when they review these things too. So one of the biggest mistakes people can make is just leave their mortgage there for 30 years and never look at it. I see so many clients stuck in bad products that are paying. I had a client with a major bank come to me paying in the 7% the other day, and I had to go and take a breath because there should be no, if you're walking into a bank today and it's a major bank and they're offering clients 4.2%, then their existing clients are on 7%. There's a real issue. And unfortunately, our banking system doesn't make those banks comply and service their customers. I think in the future we'll probably see that, but for the meantime, review it, get the right professionals on board, get the right structure in place, and really understand when you're ready to review it. We don't get it right 100% of the time. Clients forget and all of that sort of stuff, but it's definitely something you need to keep your eye on. There's no loyalty in terms of banks because unfortunately they change all the time. You'll see these big majors getting bought out by other majors, and then the service and the rates completely change. So you definitely need to review it.
Yeah, and I think that's because, of course, we get it too. So we don't. Our core focus is helping people with property investment from all over Asia Pacific, and we work closely with you for quite some time. But you're working with clients, like you said, from first home buyers, and they're on a different journey. If you've got a change of job, if you've got better jobs, or if people have lost their jobs. so many different circumstances change over your lifespan, and that's why it's important to have a team of professionals around you, because as a consumer, you can't be expected to know all of this. And this is what you guys do day in, day out. So whether it's a first-home buyer, a property investor, you can help our clients from start to finish.
Another really important one is self-employed clients. So we deal with commercial and business banking too. So when you've got a self-employed, they might have complex accounting that needs to be understood, and that can go a long way into understanding the structure that they need moving forward too, when they're buying investments or when they're refinancing, or finding the right lender to do that. And again, sometimes those financial circumstances will trump rate, because somebody will need a specific product that's going to support them in their self-employed financial situation, rather than just get me the lowest rate. Sometimes they need access to more cash flow, whatever that might be. You really need to see a broker that understands all aspects, because even if you've just got one client who comes to you at the time that they see you, they're working for someone else, and then they get married and that partner's self-employed, that changes the advice that you get quite dramatically. You have kids and one stops working, again, it changes that advice. So it's really important to have kind of all aspects, whether you need them right now or in the future. You just want to plan ahead for some of those changes.
I think that's the big point too that you're making, that the average punter, like us or somebody, is everybody's just looking for the lowest rate. That is their only goal, is that, okay, what is the lowest rate? I want the lowest rate. And not understanding all the things you're just saying about circumstances, about self-employed, about that. And that's where they need to speak to somebody about that, because it's not just the lowest rate. That's not necessarily going to do it.
And then, Craig, which is what we help our clients understand, it goes to a broker, that can help them across the board, from a larger spectrum of just going to your local bank and you're only getting their advice from their product.
Yes,
and that might not be right for you.
Yeah.
That's a big gap in our system, unfortunately. I get lots of clients that have been really disenchanted with the financial system because they've seen a banker that only knows their product and has no idea about the grants and schemes out there, or about the other products that banks offer. You'll have a banker swear black and blue, no, you can't have a fixed rate and an offset account. And there's definitely lenders that do that. So sometimes you'll have clients come to you and say, oh, well, I heard you can't do this. And it's just completely wrong information. And somewhere along the line, that banker has themselves been confused or not had access to that information because they haven't needed to. Our financial system's changed quite a lot in the last 10 years, let alone the last 5 years. And prior to the last 5 years, other bankers didn't need to know what products are out there. And you still find that now because, bank employees, sometimes they're there for 20, 30 years and they never really learn what else is out there. So really important to find someone that's got...
is that some of the banks don't necessarily want you to know what else is out there. There's a little bit of disinformation, I imagine, as well, that they're pushing their products and they'll just say, because they can't do it, no, you can't do it, here's what we've got. There's that end too, I imagine.
Yeah, look, there's a bit of that. And there's also a bit of, there's 99 lending institutions in Australia last time I checked. And even I can't deal with every single one of them. Mm-hmm. Some are online banks that will a client direct and won't deal with brokers. Some of them are society banks. Again, they'll only deal with their society customers. They won't deal with, anybody. So there's a couple of niche lenders that only deal with specific occupations. We do have access to some of those, but there's definitely some out there we can't deal with. So we try and give you as much information as we can. And I would say I've compared a lot of the other lenders that we don't have access to, and the products are either the same or very similar to what we've got. So as long as you've got a sufficient amount of lenders available and you're really educated about what they can offer, brokers should be able to give you good advice. We don't have every product, but we've got enough that we can actually provide most of those products through a different lender. Most of them are funded by each other anyway. So, you're kind of shaking hands with one and, like Unloan is CBA, right? So they're getting their funds from CBA. I can't write an Unloan finance application, but they're getting their funding from CBA. So,
That's a funny system.
It's the funny world of finance.
Even more so why you need a professional that does this all day every day. Yeah. And Chrystal, I guess one of the questions that we get all the time as well is to go, a rate check is free. It only takes about 15 minutes and a bit of a conversation to get to know you and for you to get to know the client. But not only is it's free, but that we're not. You can get as many rate checks as you like. It's not an impact on their credit file.
No, absolutely not. So we personally won't make an inquiry on your loan. Even when we talk to clients about a pre-approval, we're really very conservative about when we do that, because clients might not be ready. So we don't want to go, I see this with banks all the time. They come to me and they go, oh yeah, I got a couple of pre-approvals in the last 12 months, but I wasn't really ready to buy, but the banker said I should. We can give you an idea about your borrowing capacity without making an inquiry. Any bank or broker should have the knowledge to run a serviceability test based on your financial circumstances and give you a good idea about what you can spend. If they're worried about hanging their hat on that information, then they may not be as experienced as you hope they will be. So we will definitely do pre-approvals, but there's a time to do those, and that's when clients are seriously ready to make offers and they're really looking to buy, because every time you do a pre-approval, it's another inquiry. So we definitely want to make sure that they're ready to go.
Okay. So, Chrystal, what's the process? Where the phones are ringing off the hook, leads are coming in everywhere. We work with those clients. We give them a call. We then set a meeting with you and your broking team. What's the process after that?
So we've got a couple of different ways you can do this. So we have got an online short fact finder, which is just your basic financial information that can come through to us. And we can do a bit of research before we have a call with you. Or you can book in for an appointment via our calendar link. So there's myself and there's a few other. So. Well, those are also available on our social media pages. If you jump on there, you'll see posts up there with those links on there too. So we make those readily available. And we always say to our customers, if you've got friends and family that want to rate review, send them our way. It's a 10, 15-minute conversation. Happy to help them. They might be on the right track. They might not. But from our point of view, it's a goodwill gesture. We're really happy to get people into the right rates. Whether they can come to us right now because of circumstances or can't, we're happy to work with them. And start building a relationship, because realistically, that's the most important part about this, is getting the right advice, but also just having someone on your side, getting you the right advice and structure long term. So start the conversation.
And then the time frame, Chrystal, so you'll then give a client a good understanding of how you can save them if you can. You'll then send them a proposal, like you said, it's a 2-page document, and if they wish to act on that, they need to get some documents to you, obviously, to support all of that. That whole process is about how long?
Look, the actual document side of stuff isn't as time consuming as it used to be, and I think people go, oh, I don't want to do that because it's going to be a headache. Most people now, everything's electronic, so rates notices, pay slips, income statements is on MyGov, and the bank statements we actually collect via an Illion bankstatements.com.au, which is a really safe service. Illion's one of the credit agencies in Australia. They hold our credit files, so their privacy is very high. But what that does is it cuts out that time trying to get the right dates and the right format and all that sort of stuff, and it just sends us everything that we need directly. So that's actually not that time consuming now.
So it's
that part of the process.
Fast, painless process.
Yeah, look, the only time we ever have trouble is if someone's still receiving pay slips and they don't know how to access them. And that still happens, but we usually walk them through it. Look, we even accept screenshots of stuff these days because cameras are so good that we can convert it to a PDF and into the format we want quite quickly. So it's pretty easy to get those documents, whereas back in the day you had to go get a scanner, post them, all that stuff. That's gone are the days that we have to do that, thank God.
Originals.
We're not faxing any applications anymore. You chuckle, but we actually used to, and it was painful. Right. So we're glad that the fax machine's out the window.
I still have one at home.
Throw it out the window. But that's kind of the process. And then we have a final Zoom call with our clients. We do the ID process. The ID process is really easy. There's quite a few solicitors now that during COVID set up, verification of identity processes that you can do on your phone. Take photos of yourself as a selfie, take photos of your ID, and they'll verify you directly. So that means we can service someone in WA, we can service them in Adelaide. Yeah. We've got people on the ground in Adelaide, but we've got both face-to-face and electronic means of verifying these things these days. So we have a quick Zoom, we run through any of the information that we're missing, have a chat about products, preferences, structures, because that's a really important conversation. That conversation alone probably takes about 15 minutes, that part of the process. And then once we've got that, all that information we've put into our software will actually generate their application and their compliance documents telling them what our recommendations are. So we're taking notes as we go. We're putting in those notes and why we're recommending the structure we're recommending, and then that will churn out into documents that they can sign electronically in most cases. Like 99% of the time now we can do that via DocuSign.
Well, if there's 2.5 million refinances and remortgages going to be done in the next 12 to 18 months, it's got to be fast and it's got to be efficient, right?
Yeah, so the trees are happy. There's a lot less paper.
See, COVID helped a lot of different things. It accelerated a lot of the speed in that.
It pushed the banks to get into the current century.
Digital era.
And it did really help us fine tune that process. Well, we were kind of already electronic anyway because we've been electronic for a while, but we definitely had times where we were pulling our hair out going, how is it that we need to print this application and get it signed? Or why do we have to go drive 20 kilometres to ID someone when we can do a VOI via, a major solicitor? This is obviously being checked to the, to the nines.
Yeah.
So it's good to see them make the move. It pushed them to make the move or they won't get a survive, right? So it's been a good change. Yeah,
we talk about this in a couple of other episodes, how COVID changed the world. And it was a difficult time, there's no doubt about it. But, it certainly helps, consumers, Australians, property investments, helping you refinance your home loan better with
even contracts of sale, they're all electronic mostly now. Back in the day, we used to stand at the fax machine with a 200-page contract. So we are loving DocuSign for contracts.
Exactly.
Best thing they ever did.
So, Chrystal, thanks so much for your time today. 2 bits of advice. Number one, don't go crazy over this Christmas. Yeah.
Pick up the phone. You know what? I always say to people, it's got to be livable. And even when we're looking at refinancing, people that have taken some time off to spend with their kids, it's only a short time in your life. Just get the structure right.
Yeah.
And then let's rebalance it when you're back at full-time work or rebalance it when the kids start school.
Yeah.
We work to live, not live to work. So let's get the structure right and plan around those goals, but start the conversation.
And get the structure right now, like you said. So it might be a little bit of time consuming now, but the advantages for you down the track are so much more. The whole world opens up. We can take you on that path to property investments and paying off your home loan faster, becoming debt-free faster.
Debt consolidation. Whatever that thing is, buying a new car, whatever that goal is, just start the conversation and see how realistic it is.
Well, let's go with this. Make it easy. What we've been talking about the whole way, and say, Chrystal, what do you recommend property owners and mortgage holders do right now? Like, it's pretty late where you are, but probably too late to call you. But what should they do right now, as of today? They've heard all these things. What they should do. What is their first step? What should they do?
Go online and book an appointment. It's a 15-minute call. So we put them purposely in there for 15 minutes because we don't want it to be time-consuming for clients either. And just book a time. There's plenty of slots available after hours, weekends, whatever. We make ourselves really flexible. There's a lot of us, so why not? And just start the conversation. Send an email, get on our website, get on our social media and send through a message on Facebook if it's easier. But start the conversation.
That's very
Write
easy.
down what your rate is, who you're with, phone number, and we'll call you.
That's very easy.
Chrystal, thanks so much for your time. I know you're a busy woman, so you've probably got the kid to get to sleep soon. So thanks so much for jumping on the podcast. And we'll see you in the next episode.
Thanks for having me.
Yes, thanks, Chrystal.
Thanks, Chrystal. So thank you for taking the time to listen to another podcast from Geonet Properties and Finance Group. Please like and subscribe for more information, and we're going to see you in the next episode.
See you then.
Bye-bye.